Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. Today, although, I'm recording the briefing for tomorrow a little bit earlier because I'll be busy later today. But we're heading into the close, and I don't think, the possibility is low that something will happen because we have a very, very centered price action. So on the larger time frame, we had no change for the day because we started trading within last week's range, close to the middle and close to the key area that it is the 29.91, which is the level we broke from at the top of this 4-day balance range. So no change on the monthly, no change on the weekly. On the daily, however, we had late last week a short-term balancing range up here. Today, there are a few things that have changed. We have geopolitical tensions in the Middle East due to the attack to the Saudi Arabia facilities, and that is creating a little bit of uncertainty. So the equity markets have been under pressure, so that could have had an effect on today's price action. And also, we discussed in last night briefing that there was a possibility of the market having a little bit of an inventory imbalance, and today we've seen a correction. So far, it's a correction. We didn't reach the top of the range that we broke from. So far, it's just a correction. Now we move to the market profile. You can see I took the overnight profile out to make it simpler. But basically, the story is that we gapped down and we immediately attempted to close the gap. However, we failed closing that gap despite having a clear chance. And C did try again, not even got to the B high, and then we have a big flush down. And since then, the market has been lifted. It is, I would have been expecting this 29.91 area to act as support, which is the level that we broke from. You can see that the low of the day is just a few ticks above the singles left on the 11th of September. So the top of the range, the previous range, is acting as support. However, it is important to note that number one, the gap held. It is not a strong gap now that it has only one tick separation, but it was not possible to take the early morning highs and drive into the 2-day balance range like the core value up here. So number one, the gap held. Number two, we left an incomplete auction to the downside. There's no excess at the bottom, and it's only a couple of handles from the previous range top. So the structure is not the best, and the pressure down is confirmed. We have established value lower, and the POC for today is very prominent and is way down. So definitely a correction. What we need to see if there will be continuation on that correction or a rejection of these levels. Focus for tomorrow, this is a narrow range. I would focus on value development relative to today's. If we start getting acceptance below the 96, 97 area, that will increase the odds of an extension of the lows, and that will bring into play the key 29.9150 area. Now, with that level, we know that this should act as support. So what you want to see, that there could be some volatility. Remember that on Wednesday we have FOMC, and the market could be very tentative heading into that risk event. So what you want to see if we do test to the downside is if we get acceptance back inside or if it gets rejected. If you start getting acceptance, 2 TPOs, 3 TPOs back inside in the 88, 89, 87 area, that denotes a dramatic change, I would say, and increases the odds that we trade lower. On the other hand, if we reject this area and we start heading back above, and let's say that you get acceptance above this so far afternoon high, 3,003.25, that will increase the odds that we will get back into the Thursday, Friday 2-day balancing range. And if you do that and you get acceptance up here, that will increase the odds definitely that you will make another attempt at the all-time highs. As I said, anything can happen because odds are just odds. News are hitting the wires in news regarding every single thing affecting the market, the trade front, FOMC, now geopolitical tension. So you need to know what you're doing, and you need to manage your risk wisely, and try not to get caught. Avoid getting caught in the wrong side because things can move really quick. So far, the larger time frame uptrend remains valid. Today, it seems like it's only a correction. However, you have a few data points. You have the incomplete auction, proximity to the range top, inability to close the gap, saying that it is a correction, but we are down here. So let's monitor if there's continuation or if we get back up.